How's it going, everyone? It's Sam. I am going to do something a little bit different, and I'm going to talk about my net worth. Someone actually gave me a hard time recently about not discussing it on the channel, just a commenter. And honestly, I don't mind discussing it. I don't have anything to hide or anything like that, so I'll show you it here today. With that being said, I do want to talk about financial independence, and there are a couple things that I want to show in accordance to that. I will actually leave this spreadsheet underneath the video. So I'll leave a link. Thing is, I can only make it read only. So what you're going to need to do is you're going to need to copy it and then paste it in your own spreadsheet here. So you can just paste it and it should keep, I believe it should keep all the different equations and stuff in here. I think this is going to be really helpful to a lot of people. If you guys like this, please leave a thumbs up. I really appreciate it. These videos don't get a lot of views, but I like making them because I think it does help some people on their road to financial independence. If you guys want, there is a link underneath the video to start up with BlockFi to get an interest rate on stablecoins up to 7.5% right now. And you can get a bonus for signing up. In addition to that, you can get like a Bitcoin back rewards card and stuff like that, which is really cool. And there's a link down there to Webull to get a couple free stocks too. So let's get started here. Right now, I'll be honest, my fiance and I moved out recently from our parents' houses, and we don't really know what we're gonna spend yet. We've been buying a lot of stuff for the house because we didn't have our own places before. So right now our spending is very high compared to what it will be. So I'm just gonna assume we have an annual spending of $50,000. And that would make our FI number, our financial independence retire early number, about 1.25 million. Because of the 4% rule, you get 1.25 million. So we're gonna assume the years to FI for us is about 5 years from here on out, which we're gonna say we're gonna get a 7.5% annual rate of return. That means that we can actually create this thing called like the years to FI multiple. Basically, what we're looking at here is if we have, let's say $100,000 today, what is it worth in 5 years when we're going to expect to retire? Now, you can lower this rate, you could say 0%, but we should probably get some return from the stock market and from our other investments over the next 5 years. So that means that if we had $870,000 today, in 5 years, we should have this 1.25 million based on a 7.5% return. So we can break down the cost of financial independence per day into one number. So we just take this FI number and divide it by 365, and every $2,385 we have today buys us 1 day of financial independence based on the 4% rule. So it's kind of a cool way of breaking it down. You can use your own numbers on this. If you're looking 30 years out, what's the cost of FI today? It's probably going to be a lot lower because of compounding returns. Now, I should say too, nothing in this video is supposed to be braggadocious or anything like that. My net worth was negative probably 15 months ago, and then it changed pretty quickly based on the success of the channel. So things can change very quickly. It's not supposed to be like braggadocious, but I think some people do appreciate knowing kind of where I am when you're watching these videos. So first of all, ways to retire faster: you can spend less, invest more, greater return on your investment. Those are the three things. I do plan on getting into real estate soon, which I think will help me get a better return and a more stable return. So I'm going to do that soon. So that's just something that you can take a look at if you can find a way to make more money or spend less or obviously get a greater return. That's awesome. Usually we talk about getting a greater return on this channel. Now, I do have some liabilities. So I have I have 5 different student loan accounts from my college loans, and I am keeping them around. I'm not paying them down quickly or anything like that right now. I used to because they were at higher interest rates, but then I refinanced. And honestly, at these interest rates, the thing is you can actually write off some of the interest on your taxes too, which is really important for me this year because I am in a higher tax bracket. So the real interest rate that I'm paying is probably closer to 3% or so. And some of this is deferred now for a little bit longer, I believe. So I'm not trying to pay these off really quickly. I think there are better places to put my money. So those are the student loans. And then I do have some some money on credit cards. It's not debt or anything like that. I've never let it carry over. I just bought a new laptop that hopefully I'll be shooting on here soon. Now I have some other business expenses. I pay it off every single month, but I did just put in a decent amount on the last couple weeks just because, again, a lot of stuff for the house and stuff like that. Taxes, I do have some money saved up for my quarterly taxes, about $12,000. So that is a liability. It's just taking away from my cash. I have it already saved up, but it's something that I will have to pay. Then property taxes, I have to pay $4,000 this summer. I have to pay that in a couple weeks. So I just want to throw that on there, really get the true net worth because I'm going to be paying those in a couple weeks. You could say, hey, you haven't had to pay those yet, but I will have to pay them. So I'm just taking them out now. Then we have some assets here. Webull account, about $26,000. We're going to say that the interest is 7.5%. Now, what I've done here is I put the interest rates over here, and then I put the daily cost. So I kind of like this. I can see how much I'm making in passive income, or at least averaged out over the years, because again, maybe I don't get exactly 7.5% in Webull this year. Maybe it's 20%, maybe it's negative 5%, we don't know. But over the long term, it should be 7.5% or so. Just in this example, I went a little bit cautious with it. It could be 9 or 10%. It could be 12%. So if we outperform the market, that's great. But you can see the daily cost is $8.24 just based on my student loans. Then Webull gives me about $5.31 in interest. Again, I put interest, but it's just a daily appreciation. HSA, I have $13,000 invested in there. Roth IRA, I have $21,000. 401k, about $10,500 from my last employer. Solo 401k, about $37,000. Cash in my individual account at Fidelity, about $5,000 in there, $5,100. Just cash sitting in a bank account. I put 1%. I honestly should probably move this down to 1%. The reason I put 1% as opposed to nothing, I don't get 1%, but I think that it's really easy to get 1% on that. Like I can move it to something else very quickly. So I don't have to put 1%. It doesn't really make a large difference, but I think there is some potential there. So I just put it at a very small amount. I could get 1% on it if I moved it into a higher yield savings. Then I have stablecoin, the lowest of which pays me 0%. I have a couple $1,000s in a platform that doesn't pay me anything. And then I have about $4,000 in an account that pays me 9% over at Voyager. So if you guys want to check out Voyager Digital, they pay 9%. These stablecoins don't move in price. So it's pretty much just cash. I could move it up to the cash, but there is an interest rate on it. Then I have about $24,000 over at BlockFi, which pays me 7.5%. I actually get a boost because I have their credit card. So $32,000 in stablecoin. Some of this is going to go to real estate here soon. Hopefully this increases the rate up to probably 10 to 15% rate of return. And then we have M1 Finance. I have a dividend portfolio over there. We're going to say 7.5% a year in appreciation and dividends. Then we have crypto. So I have a good amount in crypto now, about $76,000, $77,000. Depending on the hour, it can go up $2,000 to $5,000. So, or down $2,000 to $5,000. But we can debate whether you should put that in your net worth. I think of it as I could liquidate it right now and have the cash in my account, in my bank account within a few days. So I counted on here 7.5% interest rate or appreciation. I think it will be higher than that because I actually get interest rates on that crypto. So I get paid anywhere from 4% up to 12% on some of the cryptos. So I get paid a good amount. And then also the cryptos are increasing in value. So I think this will be much higher than 7.5% over the long term. It already is. I mean, I've gone, I think, a better than 7.5% return since I bought in the last couple months. And then we have sports cards. I have a small sports cards investment, which will probably go up in value. That's how much I spend on it. So overall, I get about $48 a day in passive income from these different assets. Now, I could say that, hey, property taxes are a liability, and I could break down the daily costs. I could put insurance and stuff like that. But that's not, that I don't know if I would really consider that a liability because these are lump sums. Those are just kind of living expenses. With that in mind too, I could say property taxes are living expenses, but I have to pay them here soon. So overall, $48 a day in passive income. That being said, with the difference between these two, it's about $40 in difference between these two assets versus liabilities per day. Now, coming down to the big numbers here, let's take a look at overall assets, because I know a lot of people are just here to see what my net worth is. So overall, about $506,000 worth of assets. I did include all these, and then also my house, which I bought recently for $237,000. I bought that. I don't have a loan on the house, not by choice. I would have a mortgage if I could, so that I could leverage my money a little bit more, but I had to buy it like this because of the fact that I don't have steady income, because this has all happened in the last year. So I don't have 2 years tax returns as a business, but I have $506,000 worth of assets, but I do have liabilities too. I have about $91,000 worth of liabilities. That's everything from student loans over to property taxes and credit cards. Not really credit card debt. Like I said, it's just money that's held on my credit card that I'm going to pay off this month. So about $91,000 there. Overall, my net worth is about $416,000. So not some of the flashy numbers that you see from other YouTubers like Meet Kevin or Graham Stephan. Hopefully that's in my future here in the next couple of years. But coming from negative, this has been a big change. And I actually paid more taxes so far in the first 2 quarters this year, so the first 6 months of the year, than I made my entire life combined. So it kind of all happened very quickly. I'm in a higher tax bracket, so that is something that I've already had to pay a significant amount of money, and it's not included in this net worth, obviously, because I did pay it recently. Otherwise, it would be over $500,000 significantly. So days of FI right now, I took this number, I put all these numbers here together, all the assets that aren't my home, right? Because I don't really consider that something that makes me money. It's part of my net worth, but it's not really an investable asset. So I took that, I took all these numbers, and then I actually decreased my liabilities from those numbers, and then I divided by this number up here, this cost per day of FI. Now, this might not be the best way to do this, because the fact is these liabilities cost me a lot less than these investments. And I'm pretty much just saying, hey, if I had to liquidate like my Webull portfolio and my 401k and all these other things, and then move them over and pay off these loans, which I'm not going to do, how much would that cost? And how many days of FI do I have left after that? So again, not the best way to do that, because fact is it's a lot less expensive to keep these loans and to keep my money in investments over time, because the investments will probably do a lot better than a 4% interest rate on a student loan. So not the best way to do it, but that is a little bit more conservative that way. So I am maybe about a fifth of the way to FI. I think I'm actually past that. I'll probably continue working after my financial independence number, but that is where we're at now. So thank you guys so much for watching. I really appreciate it. Again, I will link this underneath the video. I'll share it, and you can only view it, but then you can copy and paste it into your own spreadsheet. Thank you guys so much for watching, and I will see you in the next video. Bye.